Hey, what's up YouTube? Welcome back to howtoplaystock.com. My name's Kepley. Today's September 30th, 2016, and do I have a lot of news for you? Just to recap here, over the last week and a half, I didn't get a chance to shoot a video last Friday, so I apologize for that to my viewers, but I want to recap on what's happened just in the last week and a half, because a lot has taken place in the global markets. Okay, so for starters, last week we heard from the Fed, or the Federal Reserve. Janet Yellen wasn't going to change rates. I already kind of assumed that would be the case. And that took place, I believe, like on Wednesday or Thursday of last week. So rates were left unchanged. Then we had Deutsche Bank start coming into the news. And I want to talk about Deutsche Bank today with you guys a little bit more in detail, so you can get a clearer understanding of what the repercussions are going to be of Deutsche Bank if it goes down, or if they do a bail-in, which they're in the talks of doing right now. So I'll cover that, and then I also want to go over the special drawing rights, which is the IMF dollar. Basically, it's what they print to loan to different countries, and as of October 1st, China's going to be joining the SDR. So I'm going to cover kind of, what that's going to mean for Americans when it comes to the USD currency and the purchasing power of the US dollar. Okay, because there's a lot that ties into that. So stick around, and I also am going to show you a way that you can hedge against this, and you can become your own central bank and print some money for yourself. That way, as your dollar loses purchasing power, you can make it up on the back end. Okay, so keep watching, and I'll see you in the next part of this video. Okay, so for starters here, I'm going to explain what the special drawing rights is, the SDR basket for the World Bank. This is basically their US dollar, per se. What it is, it's all it is just a currency basket. Okay, so it contains multiple currencies in it, and they use it to loan out money, basically, to other countries when countries get in trouble. Okay, or they need to do something, like reducing risk. It's almost like a treasury note or a bond here in the U.S., except it's for all countries on planet Earth. Okay, so basically the value of this SDR currency basket, guys, is determined by summing the values in US dollars. Okay, US dollars, that's important to remember. So you sum the values of the currencies. They're determined by summing the values in US dollars based on market exchange rates. Alright, so it just deals with currencies. That's all it deals with. Alright, now it consists of, at the moment, it consists of the USD, and this is the breakdown on the basket of currencies. The US dollar is at 44% of the basket. Okay, you have the euro, which is at 34%. Then you have the Japanese yen at 11%, and you have the British pound, okay, which makes up the other 11%. I believe gold is in there at maybe like just a low amount of, say, 2 to 5%. I'm not 100% certain on that, because in the research that I was doing on this, I didn't see it come up anywhere, but I would venture to guess that there is some type of precious metal, either silver or gold, that makes up a tiny fraction of that. Okay, and the reason why is because it has to have, you're gonna have to have some value somewhere. All right, because if we know that, one thing we know is that all currencies right now are fiat, so they're backed by nothing. All right, and that's important too to remember, because as of October 1st, okay, China is going to be joining this currency basket at 10%. Alright, now what does that mean? That means that your US dollar, guys, alright, right now makes up 44%, right? That means your US dollar, excuse me here, I'm going to erase this real quick. That means your US dollar is going to have some competition. And if you keep in mind what I just said about the currency basket, What is the value determined by? The US dollar. Now, with China taking up 10% of that now, it's going to take away value from some of these other currencies. Okay, and this is just a hypothetical scenario. This is not set in stone yet, but this is what I'm getting from some of my research that I'm doing on like Wikipedia. All right, I know Wikipedia is not the best source out there, but it provided me with a good example of what might happen. So basically, what could end up happening here is the USD, instead of, we said it was at 44%, instead of 44%, it might make up 26% instead. Okay, because you'll have the renminbi in here at 10%. Okay, and actually, let me change this number here. 26 probably isn't accurate. It's going to be probably something more along the lines of 34%. So just take 10% off the USD. Okay. That's hypothetical scenario. What might happen? Now, if that happens, and this is already happening right now, China just issued their first SDR yuan-backed. Basically, it's a bond. Okay, and they're issuing it out right now as we speak to people in China. All right, now what does that mean? That means that the Chinese yuan joining the SDR basket has just dethroned the US dollar as we speak as the global reserve currency. And the reason why, I'll explain it real quick, the reason why I say that and why it's a fact, this isn't some conspiracy theory. The reason why it's a fact is because all exchanges, when it comes to trading, have been done on the US dollar. Okay? Now this bond, this SDR Chinese bond that was just issued to its own citizens and is soon to be issued to other countries, it was basically created so that it could provide an alternative option to other countries who are doing international trade. So now they don't have to go with the US dollar. Guess what? They can go with the SDR Chinese-backed bond, okay, which is basically just a treasury note. It's an IOU. It's a way for other countries now to go around the US dollar and exchange their goods in return for money, okay? And it's also a good asset for other countries to use as a safe haven against the US dollar, because the US dollar, guys, it is collapsing. It is collapsing as we speak. Our politicians are printing money. The Federal Reserve, I think, is just scheduled to print probably another $4 trillion here coming like the first part of September, or the first part of 2017. Okay, so we are in a dire situation. It is very critical right now. That's why you have to be paying attention. And come October 1st, I believe this is going to basically introduce some major disruptions into the currency markets. Who knows what's going to happen, but I can tell you it's not good. It's not good for the US dollar. Okay, because as I speak, I did some research on this. The, what was it, the Chinese backed yuan, the bond there, as we speak, now that it's given other countries a different option for international trade, they no longer have to hold U.S. bonds for debt because it's worthless. They know it's worthless. Why would you hold anything that's worthless? It's not going to give you a return. And they already know this. So what are they doing? They're dumping their bonds back out on the market right now in U.S. dollars. And they're picking up this SDR Chinese yuan bond. Okay? It's a special drawing right from the World Bank. Okay, and it all revolves around that currency basket. So they have another option now that they're going to go with. A lot of countries are lined up for this, and they're just waiting at this moment. And people still hold U.S. bonds, okay? It's not the end of the world. The sky's not going to fall tomorrow, but it's definitely going to be on a gradual decline now because from the numbers that I was picking up from other experts, the total amount of U.S. foreign debt, okay, like foreign bondholders that hold U.S. dollars, the amount that's circulating out there right now that is supposed to basically be dumped back out on the markets is going to be around the tunes of 33% of all U.S. dollar bonds. Okay, now if you add that amount up, it comes roughly to about $6 trillion. Now $6 trillion, if it doesn't have anywhere to go within, from country to country, guess where it's going to come back to? It's going to come back to our shores. All right. Now, if you hear people speak, some of your financial experts right now, if you hear them talk about, this financial tsunami that's coming back to our shorelines, that's what they're talking about. It's in the form of these bonds. They have nowhere to go. All right. Nobody's buying them. So what do they have to do? They have to come back to our economy. Well, how is that good for our economy? It's not. It's not good. Okay. It sounds good because you get all this money coming back in. It sounds great. But short term, it might be, but long term, it is going to devastate us. And here's why. Because when the money comes back into our shores, all right, you have more money in circulation now, which means that the purchasing power of your dollar bill in your back pocket is going to go down because there's more U.S. dollars. And it may not go down in value, per se, but the prices of other consumer products and goods in stores are going to go up, all right, because there's more dollars. It's going to require more dollars to buy these products. So you're going to get inflation, okay? Now, I know this is a lot I'm throwing at you right now, but this is a fact. This is happening October 1st. That's tomorrow, okay? And tomorrow, it's ironic, tomorrow's the weekend, all right? And banks are notorious for doing this kind of stuff during the weekends, all right? So it's nothing to panic about. It's just something to know because you can do something about it. All right? So that's the SDR currency basket. I'm done explaining that for right now. The next part I want to cover here is the Deutsche Bank situation, okay? Because that's just another problem on top of what I just explained. All right? Now the Deutsche Bank issue, basically, guys, here's the situation there, all right? They're in trouble from a lot of fines that they've been getting over the last year and a half, and it's like to the tunes of $14 billion in fines. And they have about $70 trillion in derivatives. Nobody really knows for sure, but the estimate numbers out there coming from experts is about $70 trillion in derivatives, okay? Now, if you don't know what a derivative is, basically, the easiest way to explain it, a derivative would be like, let's say you have an apple tree, right? And Robert Kiyosaki explained this really well, so I'm going to use his analogy on it for a derivative. Let's imagine you have an apple tree. A derivative of that apple tree would be the apple. Okay, that's a derivative of the apple tree. That's all a derivative is. So a derivative of money or your currency, a derivative of that is just a financial tool that you can use to hedge bets against markets going up, markets going down, stuff of that nature, okay? Now, it's very, very toxic. We experienced a lot of this in 2008, and that's what created a lot of the 2008 crash in the real estate market was derivatives. Now, that 2008 moment when Lehman Brothers collapsed, okay, that was very, very, it was a large-scale event that took place, but that just happened here in the U.S., that's it. Deutsche Bank, on the other hand, is one of the world's largest banks, okay, and they carry, they're considered one of the most dangerous banks out there right now. It's Germany's largest bank, and they do business with every bank on a global scale in every country, okay? So this is a much more serious situation than Bear Stearns and Lehman Brothers back in 2008, because those banks may have done some business, internationally, but it wasn't on the scale that Deutsche Bank is doing it. And Deutsche Bank has, like I said, they're estimating about $70 trillion in derivatives. So when this thing starts going down, well, it already is going down. It's been going down for almost a full year, okay? And I woke up this morning and checked the Google Finance News, and Deutsche Bank right now is plummeting. So I read the news yesterday. Here's what they said yesterday. Okay, Mario Draghi from the European Central Bank, all right, the president of the European Central Bank, he came forward and told Merkel, who's the German prime minister or counselor over there, he told her, help bail out Deutsche Bank. Well, she said, no, we're not going to do that. They're too big. Okay, now, what's happened since then? They're basically talking about maybe the possibility of a bail-in. And you might be wondering what a bail-in is. Bail-in is basically when the banks close their doors through a bank holiday and you're not allowed to get your money out of your account. When they reopen their bank, your money's gone. All right, this happened in Cyprus back in 2011, okay? They tested Cyprus. It was 100% successful. And guess what? They're going to do it again in Deutsche Bank. All right, with about 40 to 50% of their clientele, if they go with a bail-in. All right, the only other alternative is to let it collapse because it's too big to bail out. Okay, the IMF can't even bail this thing out. That's how big of a mess we're in right now, on a global scale, financially speaking, with all banks. Okay, they're all insolvent. So with all this information that I'm throwing at you right now, with the SDR, the Chinese yuan-backed bond that's being introduced, the Deutsche Bank situation, okay, that thing blows up, guys, you might as well forget about the financial system that we're in right now. It's going to be gone, okay? But this presents a lot of opportunities too, and you can do something about it. And this is what I was talking about with becoming your own central bank. What do? Well, there's something called gold and silver. I've covered it in several videos. Get into hard assets, oil, real estate, gold, silver, anything that's tangible that you can hold on to that stores intrinsic value. You need to start holding on to that kind of stuff, okay? Because I already told you what the banks are going to do when it comes to being insolvent and collapsing. Okay, if they can't get bailed out by the central banks and the central banks say no, guess what they're going to do? They're going to close their doors and they're going to take the money from savers. That's why I say savers are losers. So if you're saving money, stop being a loser. All right, be smart. Take your money out of the banks, put it in a vault, invest it in hard assets. Okay, there's still places you can go to get a return. And I'm going to show you in the next part of this video. I'm going to show you my returns that I'm getting already. Okay, because I've doubled down on SLV, which is ETF for silver, and I've got a vault with silver in that too. Okay, so I'm holding it physically. I'm also trading it. Okay, gotta follow the smart money, guys. You have to be smart. You have to pay attention because they're not telling you this on the mainstream news right now. They're not even covering it. You know what they're covering? Donald Trump and his marital status to like a wife from 2 wives ago. Who the fuck cares? Really, who cares? Because really, it doesn't matter who gets in as president, Hillary Clinton or Donald Trump. It doesn't matter. This thing is such a mess, they can't fix it. Only thing they can do is kick the can down the road, and they're actually running out of options there too, really fast. So I wouldn't be surprised if the markets continue to dip and barrel roll downwards here for the next, I don't know, 24 months. The collapse that we're looking at is going to be the greatest collapse in the history of the world. And I'm not saying that to scare people. I'm saying that because it's a fact. It is a fact. And the more you're knowledgeable about it, the more research that you do and become aware of this, the more opportunity you have to capitalize on it in the process. Okay? Become your own central bank. Stay tuned, guys, because I'm going to show you here in this next part of the video, I'm going to show you the trade that I'm in right now, and now you're going to understand why I'm placing this trade. Okay? So stick around. I'm going to show you that, and I'll go over a little bit of the technical analysis on silver and show you where I think it's headed here in the next 18 to 20 months. On the last portion of this video here, I'm going to show you the chart for SLV, which is silver. That's the iShares Silver Trust.
basically measures the entire market for bullion silver and silver being bought and sold, and that's physical. So what you're seeing here, I've set it up. I've got volume, stochastics are my indicators. Volume, real quick, I'll just explain that. It shows in the green here, it shows when people are buying silver, and in the red it shows you when there's sell-offs, or when people are starting to sell. As you can see right now, according to the daily chart, that is going up. The volume's going up. That means people are buying into it. You'll also see on the stochastics here, it goes up and down with the movement of the price. Okay, so like if you look over here, it's dropping from here to here. Well, look what it's doing on the stochastics. It's coming down in price. Okay. Now, my 2 entry points, I've made 2 different orders, one here and one here. The first one, and I recommend this for people who are day trading, go with a small amount of money on your first purchase. Don't go all in right away. Okay, go with a small amount. I put in about 260 bucks on my first order here on the dip, and I wanted to see if it was going to go up or down. Regardless of what direction it goes, I would add to my position. Okay, because if it went down in price, I could have bought in even at a lower price. If it goes up, well, that's good, because I'm already in profit, and I know that it's probably going to go up some more. So really, it didn't matter to me what the price was. It was just basically timing and trying to get in on the dips. That's what I was going for here. Obviously, I was successful in that. These circles here that I've circled, those are called breakaway gaps. Now, these are important to look at on any type of chart, because when you get breakaways like this, it means the price is going up. Okay, or it could be going down as well. So you got a breakaway gap right in here between these 2 red lines. That means it's going down. You can see it obviously did drop quite a bit, but that's what we're kind of looking for here, is breakaway gaps. Now, the trend line here that I drew, remember, the trend is your friend. Okay, so with the trend line here, you can see the trend is upwards, and that is actually acting as my support. Your support is the floor. So you'll notice that the price, as it's going up here, it's never crossed over this trend line, and that's important to keep in mind too, because what I was going for on my entry was the price hitting the trend line here, which would be my support, and then I wanted it to bounce up, and that's exactly what's happening right now. The line that I drew here at the very top, those are my highs, and you'll notice that between this trend line and the top trend line, you form something what they call a microphone. And the microphone setup is, it's a classical pattern that occurs a lot of times before you get strong moves up in the price of a stock. Okay, it can also, it can go the other way, but a lot of times when you get this kind of pattern going, it's bullish, which means that the price is moving upwards. Alright, so that's the stock chart for SLV at the moment. I like to look at the daily and weekly charts because they show you a bigger picture of what's going on. You can look at the other ones too, but it's harder to predict like the price movement. So I like to look at the daily and the weekly. And that's really about it for SLV. Other than it, one question that people have a lot of times is, when do I sell? So if you get a strong move up, like if we go back here to what was it, 2010? Yeah, this is back in September of 2010. You'll notice that the price shot straight upwards. And when you get that kind of move in silver or in precious metals, a lot of times you're going to get some big drawbacks. And you'll notice in the pattern here, it went up and then it pulled back right in here. So if you're wanting to know when to sell, you're not going to ever really know 100% when to sell. So my best advice for people is to sell as it's going up like this, probably somewhere right, pick a price. Mine would probably be about like $26, and I would sell, but I wouldn't sell the whole thing. I would sell just a portion of it and leave some on the table, because you never know. This thing could pull back like this, and instead of going straight back down, it could bounce back up and move even higher, like it did back here in 2010. And in that case, I would have made a good profit on that. Unfortunately, I wasn't in the markets at the time, but that's what you would want to do if you're selling. And that's on strong movement. What we have going right now is more gradual. You'll notice it goes up and then down, up and down. This is more of a better situation to be involved with, and it's going to play out, I believe, more long term. So I'm planning on staying in this trade for at least probably a year to 2 years, because right now it's showing me from the weekly chart that this thing it's going to explode upwards, but it probably won't move as fast as it did back in 2010 unless we get something really severe going with Deutsche Bank and markets just responding really negatively to the SDR in China joining that currency basket. So I'm expecting more of a gradual upward move here. That's all I have for today. If you guys found this information beneficial, go ahead and push that like button and share this with people that you know. These are today's investors' investing tips. And guys, if you haven't subscribed to the channel, please do so. I'm making updates consistently about the market and where places you can put your money. I've got, if you go to my playlist, I've got multiple videos on technical and fundamental analysis and much more. That's going to help you become knowledgeable about the stock market and how everything works. Okay, so that you can basically become your own print press in times when the markets are going down like this, and you can create your own money and preserve some of your wealth instead of having central banks just rob it from you. So go ahead and subscribe to the channel, and remember, guys, income is the outcome. All right, be patient, and I'll talk to you soon.